Christine Lagarde. I'm looking at these numbers. What do I think about what I'm seeing across the inflationary picture across Europe this morning? Because consumers are clearly worried about inflation, and inflation numbers broadly are ticking higher.
Yeah, there's clearly a cause for concern, but in terms of today's meeting, probably not too much read-through. Like you said, we're interested in what the core readings are doing, and we still don't quite have that information at the moment. So for the ECB today, probably won't be the most interesting of the two meetings. I think the market's pretty comfortable in its view that the ECB can retain optionality towards a potential June hike. And so there's probably not going to be too much pushback from the ECB on that front. I think when the market's that one-sided, it is worth exploring, where could the asymmetry be? And I think there is an argument to be made it could be in the dovish direction. Not necessarily my base case, but, the ECB has been all in on inflation. If they kind of acknowledge the growth implications or, longer-term inflation gauges, such as the five-year inflation forward, which is a guiding light for their policy settings, that could potentially put a bit of a dovish tilt on the release. Not my base case, but something to watch out for. I think when it comes to the euro, if we do see this hawkish optionality retained, what happens with the euro on a day we've got a bit of a haven bid in the dollar on Iran? What's that kind of push and pull effect, and where do we land?
Do we get a dovish tilt from the BOE, given the sell-off that we saw after their March meeting?
Yes, I think the BOE is a more interesting one by virtue of the fact we just get so much more information. We get the vote split, we get the individual accounts, which, yes, gives transparency, but also injects volatility. And we also have a projection meeting as well. There's definitely more of a push and pull between the market and the Bank of England. And like you said, some of that is obviously a clean-up job from the March meeting, which was, a disaster, to put it mildly. But, we'll see how we kind of get with that, because, do we get Bailey continuing to push back on the market, saying getting ahead of itself? We're kind of in the vicinity of where market pricing was when he did do that.
3 hikes.
Exactly, yeah. So, are the Bank of England comfortable with that? Do we get pushback? Does the market even care about that? Is it still looking to run with it? But if you do get a dovish tilt and the ECB stays hawkish, that could potentially be upside in euro sterling. And, for the pound, once the BOE is cleared, we've also got political risk on the docket next week. And UK yields, they continue to rise at the back end.
Busy UK political story as well, as you say. What about the oil price then? Up by another 3.8% this morning. 122 is the handle on Brent right now. Adam, Euro Stocks 50 futures suggesting we'll be down by 1%. We have that is set to be the dominant theme. Of course, there's the sort of tech earnings theme in there as well, which could have an impact. But broadly, it's the oil price that we're focused on.
Yeah, I think oil prices are clearly a concern. For June at above 120, that contract expires today. But if you look at July, we're still above 110. So, the market was comfortable when we're in that 90 to kind of 100 range. Clearly, that thesis is being tested today. We've seen that filter through into European equities. And concerningly, we've seen for the US that we did have those good earnings from Alphabet, Amazon. That's enabled to prop up the market. That's clearly a cause for concern. And when they move out the way, how much of a negative follow-through do we get into US stocks? That's what we're watching.
OK. Adam, thank you very much. Adam Linton from Bloomberg Markets Live. Remember, you can get up-to-date analysis and insight from Adam and the rest of the Markets Live team. MLIV Go is the function to use on the Bloomberg terminal.